I've scoured the internet, Like I've spent 9 or 10 hours researching this topic, and I know this came up in the last video that we did. I can't find evidence that foreign buyers are driving this market right now. Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. Today we're going to be talking about what the heck is driving this market. What is causing the prices to go up so much? We're going to do a deep dive. Is it foreign buyers coming in? Is that what's driving our market? Is it record low interest rates? Is it government policy? We're going to look at what drives a housing market. Why would it go up? What is causing all this? What is causing 20% increases year over year? 10% month over month? Like, honestly, this is unfathomable. Like, this is like, it feels like the tulip bubble. Like, it has all the earmarkings of a bubble. I mean, let's dive into it. Let's just look at facts. That's all we're gonna do. We're gonna look at facts and see where we're at. But you can make the determination. Are we gonna see lowered prices coming up? Are we gonna see increased prices coming up? I'm not here to decide for you. All I'm here to do is provide the facts, and you guys make that decision. Comment down below. Smash that like button if you find this helpful, and share this on any social media that you think with some friends or in groups that might find this helpful. Like, what are the 5 forces that drive home prices? Obviously, there's core demand. So you got population growth, home price growth, savings rates, and financing. You got government. So obviously transaction or taxes, mortgage policy, social housing programs. Non-core demand, which would be like foreign capital, investors, speculators, dark money, which obviously was an issue in BC for a while, and it might be an issue a little bit in Ontario or Quebec, who knows. And recreational property owners. Obviously, one of the things that's all done on the demand side, and then you have the supply side. So housing stock growth, active listings, development, pre-sales, and obviously rental vacancy rates. And that all leads to popular sentiment. People think house prices are going to go up, then they might choose to buy now. And that might be what's going on. Who knows? Let's just look at population growth. I'm just going to go through Ontario here, but you can pretty much extrapolate this for all of Canada, just for the simplicity of time. That this is what we're going to go through. Okay, so obviously during the pandemic in Ontario, from January to March, we saw about 50,000 people come in. From April to June, that went down to about 30. July to August is about 10,000. And actually from September to December last year, we actually lost people. In September to December, we lost people, yet we've had one of the highest price increases of all time. So with savings, let's talk about savings and mortgage rates here. So obviously household debt ratio increased in the third quarter. Every Canadian household on average owe $1.71 for every dollar of disposable income. It would take them 21 months if they did nothing else to pay off all their loans. Now, is this good or is this bad? It's definitely an increase from the second quarter, which was at 163. Yet it's down from the fourth quarter of 2019, which was 181. So we're still 5-6% lower than we were at the end of fourth quarter. Priscilla from The Economist at BMO Capital Markets: more cash and less spending. Households were able to pay down some more consumer debt. While there has been a recent pickup, remains below levels seen earlier in the year. So people are leveraging and deleveraging. Mortgage originations are up 20%. So that means more people are getting mortgages. I feel like the secondary home market, cottage market, some of the country properties and that are being fueled by people taking equity out of their properties in the city and moving those to, outlying areas. We're just going to go through the numbers. I shouldn't give you my opinion. So savings is obviously one of the core things. It was $57 billion saved, down from a record in the second quarter of $90 billion. So people are saving. And listen, if they put that $90 billion into the stock market in the second quarter, that $90 billion became, what did the stock market go up in that time? 20%? So now you have $110 billion. And if they just take the 20% off and they put it into the property market, right? So obviously that's one of the factors. Equity, existing homeowners benefit from price appreciation. So they had more home equity to use to buy a bigger home or to move even if they sold in Toronto at that time and they moved out. Toronto saw a net migration where places like Oshawa, Hamilton, they all grew during this time. So we know that Ontario as a whole saw less people. We don't have the foreign students coming in. Immigration is slowed because obviously, if you're trying to fly back into the country right now, you got to lock down for 3 days, you got to quarantine. I mean, none of that was in place then, yet it was definitely tougher than it was before. So some people are just kind of waiting it out because why leave somewhere where it's not locked down to come somewhere where it's locked down? Mortgage rates, like what you're going to get on a mortgage is super low. Like it's under 2%, but even the qualifying benchmark rate went down from 5.19% to 4.74%. So if you had a mortgage of $2,500 at 6%, your mortgage payment is on a $400,000 home. On 5%, you're up $45,000. At 4%, you're up $55,000. So another $55,000. Yeah. So you're basically 400, 430, 435, 475. A 2% mortgage, you're at $590,000. And a 1% mortgage, you're up to $665,000. Are there people getting mortgages at around 1%, 1.3%? Definitely. So the same people that at a 4% interest rate were buying a $500,000 property, well, they're now buying a $700,000 property. So the exact same property, the exact same mortgage payment, if you were going to buy a home, now's a great time to lock in a rate. I mean, if you're watching this from the United States, a 30-year mortgage at 2-point-something% locked in for 30 years. I mean, that is free money. Here in Canada, we have adjustable rate mortgages, so that will go up at some point, yet from everything we're hearing, that's not going to go up for a while. So, I mean, obviously, so we're saving more money. Mortgage payments are going down on the same property, but yet obviously prices are going up and mortgage originations are up 20%. House sales are not up 20%. So that tells me that a lot of people are taking money, home equity out, and they're not able to do what they normally would. They're not buying a new car. Like I was talking to my mechanic the other day, and he's telling me the people he used to see 4, 5, 6 times a year, he sees once a year now because they're just not putting the miles on. And it's basically like, oh, well, we better go get all this stuff done and checked. So his business is down because of that. So they're not buying a new car. Why would they buy a new car? They're not using the one they have. They're not obviously taking vacations. They're not eating out, especially if you're in Toronto. I mean, you're maybe doing takeout, but a lot of people were doing that every night. So maybe they're actually eating at home or, they're just saving money out there. That's the whole premise of this, is that the savings rate has gone up and what you can afford for $2,500 a month is gone up. Obviously, unemployment rate, we saw that skyrocket, and we'll talk a little bit about that because jobs obviously are a factor. If we look at February, if we start at February 2020 and the change. So obviously during the start of the pandemic, we got hit hard. So, full-time people, like by April, it was down 12.5%. It started to come back, and part-time employment obviously got hit a lot. And you go down and you look and you come down to January 2021, we're 2.7% lower full-time unemployment than we were in February 2020 before any lockdown, before any pandemic. But on part-time, you saw that we were getting back there in October, November, December, obviously locked down in Toronto. And at the end, the rest of the province. And then, you see January and we're hitting close to those pandemic levels again. Obviously not, so we saw 14.7 in March last year, 29.1 in April, May 27.8, June 15.3, and January was 12.2 lower than February of 2020. Now, why this is important is because we're 2.7% lower on full-time unemployment. So if you have a job today, you feel pretty certain that you're going to have that job tomorrow, which allows you to go buy that home, which in March last year, we didn't know. Obviously 12.5% unemployment, full-time unemployment from February to April, 12.5% drop is massive. Again, you might sit there and say, oh, I might not have a job tomorrow. Let's just hold off doing any major purchases. Obviously, a house is a major purchase. So yet by January 2021, you're down by like less than 3%. You're like, okay, if I'm working, I'm doing good here. And you can see that in different cities where obviously a lockdown in Toronto, you're at a 10.6% unemployment overall, where January 2020 was 5. Kitchener-Waterloo was 8, is 8 now and was 5.1. Hamilton is still 6.3, London 7.3. These were all in the 4s before the lockdown. You're still seeing decent employment. And to be honest with you, the reason why the full-time to part-time, most people who are part-time aren't buying houses. I mean, there's some people who are, yet the majority of people who are part-time employed are not. They're the renters. I'll put this up again, but workers aged under 24 and over 55 are basically taking the brunt of the job losses. So if you're 25 to 55 in that 30-year period, like, you're still working. I mean, most of the people that I know are still working through all of this. So, I mean, and like, if you're in that before category, you might want to go to one of these cities that have the lower unemployment rate. But, you know, obviously we talked about that in the last video, the Calgary-Edmonton market right now is, for unemployment, is pretty high in those categories. So you might see some net migration from Alberta to Ontario at some point. Obviously, when people get rehired, they still need 3 months on the job to get a mortgage approval. Okay. So let's talk about non-core demand, right? So we talked about core demand. We talked about mortgage rates being low, saving rates going up, people have jobs. You know, the cost of the mortgage is super low. Obviously, with international travel restrictions that we have on right now, the foreign investment is actually lower in Canada than it has been in a long time. And we're going to go into some of the numbers there, but typically foreign investors or foreign buyers, they're buying one of two things. They're buying condos, a lot of pre-construction, because let's be honest, Chinese are the majority of the investors coming in. I mean, we do have some from the Middle East and from India and that type of thing, yet the majority are coming from China. And I've worked with some Chinese investors and they like new. So they're either buying condos or they're buying luxury homes. Not always, I get it. Yet there are people still immigrating here from China, and they're not buying $2 million, $3 million homes, $10 million homes in Vancouver, because $2 million gets you a shack. Yet that's majority of it. And a lot of it is, you know, parking money. I've scoured the internet, Like, I've spent 9 or 10 hours researching this topic. And I know this came up in the last video that we did. I can't find evidence that foreign buyers are driving this market right now. I have research from CMHC from 2016, where 10% of the condo market in Vancouver was foreign owned and 6% in Toronto. And then on the luxury side, it was higher in Vancouver than it was in Toronto, yet we still saw that. So that was skewing it, but they haven't released any numbers since 2016. There's been a couple things that obviously have changed. China has changed their policy of how you get money out of the country. There's a foreign home buyers tax in Toronto and Vancouver. Obviously, they're talking about doing that nationally. I don't know. Like, we did see that Vancouver, BC did get revenue from that, and yet that might be existing. I just don't see any evidence of it out there. So, I mean, comment down below. Send me links, because I know we get opinions down there a lot. Yet, if you have facts, I'd like to see facts. Just put a link down below for an article from somewhere that actually has stats and not just an opinion, because I'd love to see that, everyone. I would. Like, I'll definitely, if that happens, I will make a video retracting everything, saying I was wrong, and we'll go from there. Let's talk about rents. So rents are going down in some areas. So Toronto, year over year, February 21, it's down. One-bedroom apartments down 15%, 16%. Mississauga's down 5%. North York 3%. Scarborough is pretty much steady, actually. Ottawa is down 3%. Here's some facts for you. Hamilton is up 26% and London is up 23%. I don't have Oshawa and those types of things, but I'm going to assume that they're pretty similar. Obviously, Toronto and some of these areas, they see a large influx of, well, number one, there's people working and living downtown that are now working from home and have chosen to move out to a bigger apartment outside the city. Number two, have chosen to move back with mom and dad because maybe they're not employed during the pandemic. They're not working at a bar. They're not working at a restaurant. As well, the foreign students just didn't come over, which would have been a large source of rentals. And during all of that, the city of Toronto thought it was wise to change the policy on short-term rentals. So the short-term rental markets all came on. And that we talked about that back in a video in October. The condo market saw a huge influx of inventory. And that's slowly starting to get bought up, or it got bought up, and we're starting to see prices go up again. We're starting to see bidding wars. Obviously, international travel to Canada has dropped 98%. So the short-term rental market is kind of kaput. I can speak from experience. I have a couple of neighbors who rent their cottages. The cottage rental market is booming. Prices are up. If they wanted to rent it every day, they could rent it every day. Obviously, people are choosing staycation. Let's talk investors. I hear it that investors like me are ruining the market, that we buy up homes and we cause prices to go up because we increase demand. If you're a flipper, you're putting that house back on the market anyways and selling it, buying at market, selling at market. So you're just improving it for somebody. So somebody's basically coming in and putting a mortgage on the work you've done so they don't have to do the work themselves a lot of the times, right? So, that flipper comes in and buys a $500,000 home, puts $200,000 in cash, maybe that homeowner doesn't have that capital, yet they can come in and buy that property at $850,000, put, whatever, 10% down. So now they're buying for $85,000 down instead of using $300,000 in cash that they don't have. That's why flippers will always be there, because there'll always be a need for them and they'll always be able to make money at it. So let's talk dark money. A lot of times, so this is, either illicit money or money from countries with capital controls like China, which we talked about, or international sanctions, Iran, Russia, North Korea. A lot of times, again, they hide the illegal nature of the funds with, shell companies or straw buyers. There was that story in Vancouver where somebody bought a $10 million mansion and they were listed as their occupation was student. Again, there's no reason to see why that would be, that's up or down in this. So we can say that's pretty, it sounds like it's pretty much a steady thing that's going to keep happening in the market. I'm not seeing it in the Oakville market as much where, and this might not be dark money, yet, definitely we're seeing people, we used to see a lot more people on the higher end moving from China and buying $2.5, $3 million properties. And, we just haven't seen that as much. It's more of a move up market right now. So non-core demand has actually gone down because, investors are, well, they weren't, but they are again buying condos downtown, but they're not buying short-term rental condos in downtown. You are seeing that in the cottage community where people are bidding on these properties just as a straight rental, as a straight cash flow play. We are seeing that again. So let's talk government policy. How has government policy driven this housing market? Well, obviously we had emergency wage subsidy, CEWS, we had CERB, mortgage deferrals, and then suspending tenant evictions. So obviously the only thing still happening is the emergency wage subsidy that would truly impact residential real estate, which is keeping more people employed. I know that at our restaurants that you can get up to 75%. So it does, at the end of the day, if we can employ 2 or 3 more people at no real extra cost to us, we're definitely going to go ahead and do that because we want to keep people long term. It's better for our business and it's better for them to be employed and not collecting EI or going somewhere else to look for work. So that's keeping people employed, and obviously that's more on the full-time side that we're seeing right now. CERB is obviously done, but that obviously helped, I would say, with rents being paid. And a lot of, people said, well, I'm not going to be working for a bit. So they went home and collected CERB and they just saved that money, which hopefully if they just invested it in Bitcoin, then they're probably a millionaire right now. Actually, that would be a good video. If I just took $2,000 per month and invested it in Bitcoin at that time, where would I be right now? Comment down below if you want me to make that video. Mortgage payment deferrals, we've talked about that in the last video, and tenant evictions, which we can actually do again everywhere but the city of Toronto. Government intervention, how did that help? Obviously, they cut bond rates, which obviously cut mortgage rates, just helps affordability. I know when I say that, you're like, well, it's a $700,000 home now, and it's like, well, yes, but it's still only a $2,500 mortgage payment. Whereas 2 years ago, that was a $450,000 home for a $2,500 mortgage payment. That really does drive a lot of this type of stuff. And then, supply across the country is short. Like there's less than 2 months of supply in Toronto. There's less than 1 month in Hamilton, even like places like London, Oshawa. There's less than one month's worth of inventory. So if they didn't list anything for 1 month, there'd be nothing on the market. Now, do I think the spring market will bring more inventory? Yes. There's lineups of 20 to 50 buyers for every house right now. So do I think it'll all get eaten up? I mean, if they price it right and they do it properly, then I think that that's going to happen. All right, let's talk a little bit about new construction, because I hear everyone say this. Well, if demand is so high and there's no supply, why don't new constructions take this in? Right here, this is just Toronto. So housing starts are not as high as 2018, but they're not far off. In December, there was just a bit less than 40,000 housing starts in Toronto. Whereas so here's the problem. In 2019, there was 30,000 in December, right? So, these obviously take some time to get completed. We're seeing that, places like Ottawa, the actual starts are way up year over year. London, up year over year. Hamilton, Burlington, it's up year over year, but it's down from 2018. Just numbers, and we'll put these stats up here so you can have a look at them. And I'm just trying to go through all of this. I know it's a lot, but thank you so much for being with me here. You look at home pre-sales. So home pre-sales, condo market has basically ground to a halt in Toronto. Obviously if investor demand or whatnot, then you're going to see there was going to be less. Now, we have seen a resurgence since these numbers have come out in December. Take it for a grain of salt. I think the pre-sales will probably come back up, but houses are up huge in Toronto. And truly, that's only where I have the pre-sale numbers for, so that's why I use it. So existing stock is being bought up. Well, at least on the house side, the pre-sale, the new home stock is being bought up. On the condo side, it's down pretty much since October. It's been down every year. So, and it always does drop off in December. You do see that. And then it ramps up again in the new year. People don't like to buy in Christmas and January and that type of thing here, I guess. That's what it's kind of telling us. So I know this was a long one today. I know you might get sick of hearing from me. At the end of the day, what is fueling this rise? So obviously, debt levels are going up. So that tells me people, and mortgage originations are going up. So that tells me people are refinancing their homes to take equity out of them, to go ahead and buy investment properties, to buy secondary properties like cottages or vacation rentals or vacation properties for themselves. 3, the affordability up until probably January, February was attractive. People are still working. The full-time jobs are still there. So, comment down below, but I kind of just so this is the government basically floating the economy through the housing market by rock bottom interest rates. Obviously the housing market keeps a lot of people employed. Again, I hate to say it, but time will tell on all of this. Where is this going to go in the future? So can interest rates get any lower? And I've said it every time. Well, no, they're basically rock bottom, but the Bank of Canada can lower the benchmark rate again. they can lower the prime rate. So on my interest only, so my prime adjustable rate mortgage, I can still go down lower than what I'm at. So if you're in a fixed rate, obviously people are out there getting 1.4, 1.5, 1.6, 2% even. It's free money. You know, it's affordability that's driving this. It's, you know, people taking equity out of their homes. You know, a lot of people I know that have moved from Toronto, outlying areas, because they took the equity out of theirs and bought another home, and they actually deleveraged. So they didn't take the equity, they just took the equity they had and bought it, and now they're basically living for free. I think without some government intervention, I think this market's going to continue to go up. It's ridiculous. Can it continue to go up to 20% a year? No. Would I just be super happy if it went back to that 3 to 4% a year? I would. I like a predictable market. At the end of the day, who knows? And if you're in an area that you can't afford to buy in, there's no shame in renting and going and investing in other areas. And we have a lot of great content for investors here. So if you guys have enjoyed this video and you're still with us, smash that like button. Check out some of our other videos. We'll see you guys in the next one. Have a great day.